Good afternoon. How are you guys? My name is Omar Saleh. I'm co-founder and CEO at Khazna, which is, we're building a digital bank for the underserved across the Middle East. The problem in our market is a bit different than Europe, where banks are primarily concentrated in serving governments, large corporates, and high net worth individuals. In our core market, Egypt, banks cater to only 10% of the adult population. So imagine only 10% of Egyptians have access to credit cards, personal loans, insurance, etc. So this leaves a huge population that is underserved and leads to a big cash-driven economy. This similar kind of behavior is similar across some of the other large markets around the region, and this is what we're set to solve. On the positive side, this has already been solved in other emerging markets in Latin America, Asia, and other markets, and obviously it has some similarities to the problem that we are looking to solve. So in our journey in building a branchless bank, we've been working very closely with the regulators in our two core markets, so Egypt and Saudi Arabia, to basically be ahead of the regulation when it comes to the innovation. So these are regulators that accept that innovation precedes regulation and are happy to work with startups and investors to basically draft the regulations in a way that addresses the big problem in the market. Our solution is a mix of a mobile application with multiple services, credit at the core of it, because this is obviously the most needed and profitable product. We've added other products on top of that, such as bill payment, savings, medical insurance, and today's savings. And we've launched the first of its kind card in a typical neobanking fashion that is linked to our mobile app. And just to give you a sense of scale, the first 6 months we issued 150,000 cards, half of which are actually the main payroll account. So these are people that were getting paid in cash and now are getting paid digitally because of our solution. And since we're building a bank, ultimately, we look at it both on an assets and liability side. So on the asset side, we have launched and prefer income-backed credit. So we launched with payroll-backed credit, expanded to pension-backed credit, and now we're working on remittances and some unsecured credit. Again, these are huge opportunities and markets. And because we are able to have first right on users' income, we can operate at very low delinquency rates and run a very profitable business. I think on the liability side of things, it has always also been a journey. So we launched with funding, self-funding, we added venture debt, and now we just accessed our local currency debt. I think one of the very positive developments is that 3 months ago, the Central Bank of Egypt issued the digital banking regulations, and we're in the process of applying to that, which allows us over the next 18 to 24 months to start taking deposits, which is ultimately the most sustainable way of funding our assets. The recurring nature of our business allows us to operate a very strong kind of growth. So today we're at like $1 million of monthly revenue. And although the last 24 months, the Egyptian pound has devalued by 50%. So although we grew by 8 times in Egyptian pounds, we still grew by 4 times in USD. So again, it's one of those interesting markets where the micro opportunity just is much stronger than any macro headwinds. I think we've been also able to price in increases in interest rate while curbing our basically burn. And today, again, we are at cash flow break even. Being a credit-led business, we have always been very focused on our margins. So today we're at 12 to 15% of net interest margin, and we expect further improvement as we kind of start accessing deposits as a more efficient cost of funding. I think the strongest asset we have, and that we're mostly proud of, is a team that comes with a very strong background in software development, technology, and banking. This is an area that is very strong. We just launched Saudi Arabia as a market, so we added our Saudi CEO to this list. And owning our own technology is, again, the main differentiator that we have compared to incumbents, banks, and financial institutions. So because of the flexibility we have, we're able to develop our product roadmap at a very rapid scale, right? So owning both the technology, the underwriting, the collection, the entire operations in-house allows us to be super flexible, which is something that we've learned and we've seen in other successful examples around the world. The most recent products, so we're running a savings pilot, and one very interesting product that we're working on with the government mortgage fund is a rent-to-own program. So because most of users today that apply for low-income mortgage in Egypt get rejected, it's been a big barrier to offer low-income housing to those target segments. So what Khazna does is that we go and we offer the rent to our users for a 12-month period. And if the user pays on time, this basically becomes their entry point into a mortgage finance, right? So we really help bridge this gap between the total unbanked population and actually having access to services, including a mortgage, which is everyone's dream, ultimately. Again, we are expanding into Saudi Arabia, which is a very attractive market size-wise. The regulations is changing. It's the world's second largest remittance sending market. And Saudi-Egypt is a huge corridor. So we're looking to start by serving the Egyptian workers in Saudi and their family members back in Egypt by offering them with banking services that banks typically are not interested to do. I think what's very interesting about the Saudi market as well is the regulator has been extremely progressive in issuing new licenses. But ultimately, the capital markets, I think, is unmatched. So if you look at like trading multiples on the Saudi Arabian main market, on Tadawul, you'll find that all the multiples, PE, EV, EBITDA, all of that is almost double those of European, NASDAQ, all other stock markets. And this is because of the very high demand by the retail consumers. So I think it's a very also attractive kind of capital markets for anyone who's looking to ultimately list at some point of time. We are a digitally native player that is pushing very hard on a multi-product kind of offering. And it's really how we differentiate compared to traditional players who are starting traditional microfinance and banking players who are adding a technology layer on top of their existing operations. Our plan is to reach an annual revenue of $300 million over the next 4 years, and that would get us in a very good shape to be ready to go public. So far, we raised around $30 million of venture from global leading investors, both American, Western, European, but also Middle Eastern and regional investors. And we're in the process for preparing for our upcoming Series B round within the next 6 months. Thank you so much.